Hello and welcome to today's Fat Tail Daily video. Today I'm joined by our small cap editor, Callum Newman. Callum, welcome. You're filling in for Brian today. He's off on gallivanting in Singapore, so you get the Tuesday slot.
Absolutely. Happy to do it for him.
Yeah, good. So today, Callum, you're focusing on basically recovery stocks or recovery opportunities in the small cap sector. You discuss several stocks that have experienced significant sell-offs but later recovered. So I thought I'd just kick things off by asking you, what key factors do you look for to differentiate between a temporary setback in a small cap share, or any share really, and a long-term decline?
Yeah, it's a good question. As a broad brushstroke, first of all, I would say that if you go back 2022, late 2021, if you've got a big sell-off like that, you wouldn't go near it because the market, especially the small cap sector, was selling down. So the fund managers overall had a game plan of selling the rallies rather than buying the dips. And I think that's inverted now. Obviously, we have the market at all-time highs.
Yep.
So they have various thematics and preferred stocks that they want to hold. Every now and again, especially in the last 12 to 18 months, a stock will get absolutely hammered on the day. I'm talking down sometimes 30 to 40% on the day. This is just a pattern I've noticed just from watching the market every day as I do.
Mm-hmm.
And when you get a big sell-off like that, it helps to think, well, maybe this is overdone, that the reaction is too harsh. And so I provided some examples there in the article. The main thing, to look for is you have to question whether the industry is in a structural decline. So, for example, I'm thinking of Seven West Media here, where they do TV and like Nine Entertainment. Okay, those industries are problematic. But when you have an industry like, and I refer to gambling, which is very resilient, then obviously you can go, well, is this a short-term problem or a longer-term one? And if it has the look of a shorter-term one, well, it's reasonable to think like a fund manager and go, well, if you're prepared to wait 6 to 12 months, they'll probably step in and buy it if they like the long-term story. So Light and Wonder is a good example of that, which is a gaming company that's doing really, really well and just has this small issue that it has to deal with. But the share price reaction on the day was really savage, like down over 20%. So I think they're stepping in to buy the dip. So as a trader or as a long-term investor, it gives you a little look at a cheaper stock price without taking the risk of getting hit from that particular issue because it's already in the price, obviously. So then you can just sort of assess how things go from there.
Yeah, you literally answered my next question. I was going to mention Light and Wonder as a potential recovery stock that you highlight. I was going to ask you to elaborate on why you think fund managers favour that company. And I guess it is down to how the gambling industry's resilience plays into it.
Well, I should say they have a leading position within that industry as well. They're just doing really well as a company.
I was going to say though, but because coming back to a more broader strategy on small caps, like, because the price you pay is really important, isn't it?
Well, the price you pay for any company is really important. So it depends too what. This is a very particular strategy. So obviously, if you're running a momentum strategy like I do in small cap systems, and we're not going to go near these ideas. This is a different type of idea.
Yeah.
But certainly, if you look at what a day trader might do, if they see this reaction and they think it's gone too far one way, they'll step in and go the other way, and then the market can reflate quite quickly. Doesn't seem to be happening with Web today, but it is holding the line. So I've written that I thought it would stabilise at this point, and thus far in today's trade it has. So it's an interesting dynamic. It's one you can only really do if you follow the market closely. But what also can happen is occasionally when you get these big, and we saw this with Elders, you get a really big sell down, and then sort of just slowly over time it begins to recover. Now with the Elders situation, it's an agricultural company.
Yeah.
It was hit at the time because of cyclical factors. It was, from memory, it was weather related. It affected some of their divisions. Well, obviously that's not going to happen every single half. So again, that's looks where the funds management industry has been prepared to look out ahead. They want exposure to the agricultural sector, and they just slowly bid elders back up. So it's definitely, when you see these big sell downs, it's worth putting them on a watch list and just see what happens.
Yeah. You also highlight a company called TAB Corp, TAH, as an intriguing long-term prospect despite recent struggles. Is that a similar thing that you're seeing there as with Light and Wonder?
It's slightly different. So Light and Wonder is a company that's doing really well and just had a particular small issue that took them down. So Tabcorp is a different dynamic where the price slide has actually been going on for over a year. So it's not a big sell down on the day where everybody panics out of it. And that's because structurally Tabcorp has all these problems. But I mentioned this one for another reason, because the new CEO has come in and he's rearranged the board, he's taken an impairment, he's going to rejig, he's thrown out the old strategy, and he's going to put his own one in place. So again, you're getting a look at a company where a lot of the bad news is being priced in, and then we just watch. We're only watching at the moment because they still have a lot of problems, because it's a very competitive market they operate in. They've been sort of outmuscled by the other guys, like Sportsbet and that type of thing. However, a lot of that's in the price now, and the question is, can this new CEO turn around the business? And the reason we're interested in it is because it's such a resilient sector, gambling, and there's big cash flows in it, big money. And if he can stabilize that company, well, the stock price should stabilize around where it is. Then if he can start growing the business again, well, the stock will follow in time. So again, when you get these big sell downs, it's giving you a look at a cheaper price, and then it's up to us to decide whether we think that the potential upside is worth the risk from there.
In your experience, how often do stocks that experience sudden significant drops, like Web Travel Group that you mentioned, how often do they manage to recover, and what are some key indicators that you should watch for those situations?
Well, again, I mean, there's a saying in the market, don't catch a falling knife. So you have to treat these with extreme caution. So obviously if the stock price gets hammered on the day, there's a problem there. And you don't usually want to step into a company that's got a bunch of problems. But I guess with the Light and Wonder, Web, and the third example I give with elders, what I'm sort of suggesting with this is, on a short-term level, these daily reactions are overdone. Babcock was the other one, actually, where the stock gets absolutely dumped, but you have an opportunity to step in quickly on the assumption that it sort of reverts a little bit, that the selling has become too hard. The question is, should you be doing that? Well, this is where you need to know what stocks, ideally, that you're interested in, and whether the problem is minor within the context of a 3-year view or significant. So you really do need to do your homework to give you the confidence to step in and buy. Mm-hmm. But usually you have to have a high barrier for when a stock sells off, then, because obviously there's issues that the market doesn't like. So you have to be very confident in what you're doing.
So you go through 3 stocks that look quite compelling from a turnaround perspective. What sectors are you looking at that you're excited about over the next? You said you take a 3-year time horizon. Is there any sectors that you're looking at generally that you think, yep, and is there any that you're completely steering clear on? Let's end on that.
I mean, certainly the most exciting sector at the moment has to be the gold sector, because the gold price is booming. The stocks are making really good money, and there's all sorts of M&A deals that could go down from the bigger ones to the little guys. So that's as a sector I really like at the moment. The small financials are well primed to come back as interest rates come down, the economy stabilises, credit picks up. A lot of them have been really taken down, but haven't really recovered in the same way as some of the other stocks. So that's one that's really exciting to me. Ones that I'm avoiding, I mean, I must admit, I'm not, or as I alluded to last week, I'm not particularly interested in oil. I know some of our colleagues are and are very positive about it. I'm a little bit more sceptical of the whole rally, and of the opportunity set there. But what I was talking about today is these are more catalyst-driven, weekly specific events rather than longer-term themes. So you can't predict these daily sell-offs. They're something that you can only observe and see in real time.
Yeah. You have to be watching the market daily, which is what you do for your readers for small cap, Australian small cap investigator.
Absolutely.
Which I must say, the open portfolio is flying at the moment. Obviously, no guarantees it will continue, but so well done there, Cal. Thanks,
It's I mean, we talked a little bit last year, but again, last year it was so suppressed that there was just a big opportunity to come in and scoop up a lot of stuff. That was the bad news was priced in, and then if you took the view, which is basically the dynamic we're talking about today, we were able to do that with some really great ideas that have really come good. And now we see how long the bull market can keep running. But at the moment, it's getting brighter every day.
Cool. Well, we'll check in again next week, see how we're doing. If you'd like to read the fascinating article that Cal did today, the link is below in this description. You can go straight to the article. As always, it's 100% free to read. And please sign up to Fat Tail Daily and you'll get these insights on a daily basis. Cal, thanks for joining me. Brian's going to be away next week, so maybe you'll be in the Tuesday slot again.
Well, now he's stretching the friendship, but no, absolute pleasure today.
Thanks, buddy. Take care.
Cheers.